Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone, and welcome to Accredited Investor Markets Radio. I am Christopher Cahill, your host. Later on, I will be speaking with Jim Chilton. Jim Chilton is the founder of the Society for Financial Awareness. He and the others in the society are evangelists for financial literacy. They are educators for financial sanity. It's a very high-energy interview. But first, you're going to have to listen to me for a few minutes. AccreditedInvestorMarkets.com, or AIMkts.com, has several articles on emerging markets. Ted Neild of Gresham Partners, LLC, has argued in an interview with me on Accredited Investor Markets Radio that a good investment manager can generate alpha, and that is, get returns greater than an index fund that covers the entire United States domestic market for securities, and can generate this alpha by canny investments in emerging markets. So I invite you to look at the articles that we have on AIMkts.com in that regard. But first I want to talk about an article I read that originated in the Business Standard, www.business-standard.com. I found the article on LinkedIn. It's by Badal Malik, and the name of the article is Waging Battle in a Brave New World. Now, he's really writing about startups in India, so the Brave New World metaphor might be unfortunate, at least for those who have read the 1931 dystopian novel by Aldous Huxley, leaving that to the side. Mr. Malik describes a new landscape, as he puts it, in India. India is poised by 2020 to be second only to the U.S. in the number of startups that are active. He notes that internet growth in India has been 30% annually for the last 3 years. Smartphone usage has grown by 50% annually in each of the last 3 years. Active venture capitalists have grown from a mere 49 in 2010 to 222 in 2014. Global strategic investors have been entering in increasing numbers and committing increasing amounts. Mr. Malik argues that there is greater venture capital funding year on year and that it's spread out throughout the country. Now, the problems thus far, and they are just problems of an immature set of industries, is that most of the venture capital is committed to internet companies, and deal sizes are kind of low. But it's not hard to convince me that that'll change. And that's certainly Mr. Malik's view, overall quite bullish. All right, well, the article I just described was chock full of data from India. Is Indian data trustworthy? Maybe that's not a question you always ask, but you always should ask, especially in emerging markets. It's true that compared to China, India is more open and less centralized politically. And of course, it's true that China is more open and less centralized, or at least in some regards, certainly less centralized economically than it was, and less centralized politically, or less totalitarian anyway. But what about economic data in China? Bill Gross, the renowned bond king who once ran PIMCO, has described Chinese economic data as, quote, the mystery meat of emerging market countries, end quote. This should be kept in mind when we hear about the Chinese securities market crash and everything that attends to it. What is the data? Where is it coming from? What does it mean? Well, it's not the most reliable set of data in the world. These points are made in a Bloomberg article, August 28, 2015, by Nick Wadhams and Leah Harrison Singer. I pause to note that Harrison Singer is a really nice name. Beatlesque, indeed. Well, anyway, the article is filled with interesting details for one to ponder. China is a place where the figure for GDP growth somehow exactly matches that figure that the government forecast prior to that year. And it should be remembered that the Chinese legacy of statistics is Soviet style. Where it might be said to be most reliable at gathering data is with respect to heavy industry and heavy power generation. Although I'm not sure how much one can trust those, but one certainly has warrant to trust less Chinese figures for domestic lending, troubled domestic lending, volume of troubled domestic lending, etc., all of which is important in evaluating an economy. Morgan Stanley, when it measures Chinese industrial performance, looks at an index of electricity production, steel production, government revenues, exports, imports, and car sales. Maybe those are the most well-measured portions of the economy from a statistical perspective for reasons we just talked about. I like the way the article ends. It ends as follows. Like Bill Gross, the Credit Suisse economist Tao Deng has an informal processed pork indicator. In February 2014, he noted that slower sausage sales during the week-long Lunar New Year festival may mean that China's economic downturn was worse than it looked. Returning to Accredited Investor Markets, the site which is where one can find Accredited Investor Markets Radio at AIMkts.com, we find a new article by Wade Bradley. Wade Bradley is the founder and chief executive officer of Media Society. And this is a society devoted to investing in entertainment. And he writes an article about that, which he knows about. The name of the article is Amid Stock Market Volatility, Investments in Hollywood Can Beat the Odds, dated August 26, 2015. Mr. Bradley identifies key questions for investors in film. What is the audience for the film? What costs of production and release will the film have to weather? What receipts from distribution channels can be expected? All of this by way of measuring return on investment in a very cold, factual, analytically sound manner. And what about that return on investment? Mr. Bradley places it within the following context. The annual box office in the U.S., he says, is $10 billion. The annual home entertainment take for movies in the United States is $18 billion. That's $28 billion. And there's a limited number of films that compete for that $28 billion. That tends to cause a hopeful view toward investing in particular movies that at least can compete for that money. But the basic message is your chances may be optimized if you form or join an investment corporation which has a disciplined and defensible strategy. Well, Mr. Bradley might know what he's talking about. I think one should put that article in the context of the comments made by Robert Labate in an interview on this program earlier this year. Robert Labate, L-A-B-A-T-E, is an entertainment lawyer, and he gave us a very fascinating interview in which he went into granular detail on how to make money and lose money in film. And now on to our interview today. We're here with Jim Chilton of the Society for Financial Awareness. Jim is a San Diego native. At one time was a full-time teacher and coach at the high school level. Of course, he always had the natural ability for public speaking and interpersonal communication skills. We remember that fondly from our teachers and coaches. Jim used those talents in joining the financial services industry in the early 1980s. After achieving success, Jim felt the need to do more for his community, and don't we all sometimes feel that need? Well, in the summer of 1993, Jim did something about it. He founded SOFA, the Society for Financial Awareness. Since then, the Society for Financial Awareness has expanded into a national presence. SOFA plans to continue spreading financial literacy and to offer and improve its educational services to corporations, companies, and city governments. Welcome, Jim Chilton.
Thank you. Thanks for having me, Chris. It'll be fun.
All right, so you have a website, and it's really interesting. And your organization teaches personal financial responsibility and related topics. And I'm wondering if you've heard of Detroit Lions wide receiver Ryan Broyles. The reason I bring him up
I have not.
You have not. The reason I bring him up is not for sports. I'd never heard of him as a wide receiver. He's not prominent. But CNN reports that his contract pays him $3.6 million a year. But he and his wife and child live in southeastern Michigan on a budget of $60,000. Is Broyles one of yours? Obviously not. You haven't heard of him. Are you going to recruit him to help you?
Probably not. But the reality of, I think what the point is on this, at least the way I understand it, is the amazing ability of discipline of living and following a budget. And, it's really funny because I do a lot of workshops across the country, and I've always bring a smile to people's face when I ask them what the definition of a budget is. And they give you a lot of different answers, Chris. And to me, it's always been the mathematical confirmation of our suspicions. Since most of America doesn't have any kind of a financial roadmap or written plan whatsoever, when you say budgeting, people think they're getting into a girdle. And obviously in this situation, this gentleman and his wife seem to be extremely focused, and he's maybe using that same discipline as a professional in his football career as he is applying with his money, and I applaud him. I'd love to meet the guy.
Well, I have a bit of a literary bent, I'll say, and I'm going to quote from David Copperfield. Wilkins Micawber, Mr. Micawber, is very famous. His name is synonymous with hopeful expectation. But his comic-sounding pronouncement I'm about to quote is wisdom itself, I would think, from your perspective. Here we go. Annual income, £20. Annual expenditure, £19, 19 and 6. Result, happiness. Annual income, £20. Annual expenditure, £20, naught and 6. Result, misery. Do you agree, and do you ever use that line?
No, but I've heard it a lot. I have. I think it's right to the point. The one that I use is from Charles Dickens in A Christmas Carol, when Ebenezer Scrooge has been approached about wanting to know about the welfare of the working class or the people that are out of work or whatever, and he inquires about, are the workhouses still in full vigor?
Yes.
And things like that. And they're asking him for a donation, these two businessmen. And he looks at him and he says, and they said, is that what you want? And he goes, what I want is to be left alone. And then it's a very famous quote. It's all a man can do is to stick to his own business, let alone sticking his nose into the affairs of others. So the very fact that you bring up this quote from David Copperfield, it's almost in the same time. What we're talking about is living within your means, and in the Scrooge quote, dealing with your own behavior before we're critiquing other people about their shortfalls. And so I think those go hand in hand, living within our means and minding our own business.
Do not point out the financial mote in somebody else's eye when there's a financial beam in your own.
There you go. Very well put, sir.
I borrowed that from somewhere. I'm not sure where. All right, but let's talk about youth then, even though your scope is much wider than youth. But let's talk about youth. I've read here and there, and I find it actually quite convincing that if you can teach youth to do these three things, their chances of being poor are lessened greatly, even non-advantaged youth. And those three things are finish high school, do not marry before 21, do not have children before marriage. These are steps that set the stage for non-disaster. Okay, great. What do you tell disadvantaged youth beyond that to put them along the path of solvency?
Well, very easy. And I've done it a lot. I will go into my pocket and I will pull out coin and I will pull out my billfold, and I've always carried a $100 bill for me, just always have. My grandpa did it, my dad did it, so I guess I'm doing it. And say, now, which one of these do you want to focus on from now until death? And kids get it. They're going after the green. And so my point is, I use that as a pivot point, talking about doing money. You've got to find out how to do money. for the future. They're going to be coming up on a car loan. They need to talk with their parents, their grandparents. They need to find out how they do money. What are the pitfalls? Because we live, Chris, in a society, and it's very funny because, when you're doing workshops for the public and you're doing a lot of speaking to large groups of people, you got to be careful in the words you use. And when I talk about ignorance, I'm not talking about people being stupid.
Yes.
I'm talking about people being unfamiliar.
Correct.
And when we look at our country where we're at financially, and we look at raising generation after generation after generation of financial illiterates because they're uninformed, why our school systems and education do not adapt and bring financial literacy into the core curriculum of how you do your lifestyle for the rest of your life. I get the part about critical thinking, about math and science. I get all that. But, I've got 5 kids that have all left the coop. They're all working. Last year, 4 out of 5 of them got married. All they talk about is money on a day-to-day basis. And for us to deny that upbringing, whether it's the disadvantaged or any of these kids, they're clueless on how to handle money. They need to know about debt and credit and all the things that come with it, the consequences of it. So my answer, I could go on and on this. It's a hot button, but it's to do money and find out about all the stages of doing money is what I really emphasize.
Well, it's funny, in a society in which pursuing your desires, which obviously costs a lot of money, and in a society which inflames those desires through publicity and advertising and other cultural forces, it almost seems beneath us as educators to teach. When I talk about educators, I mean the educators in the schools. It seems to be beneath them to teach financial literacy. It's not as important or respectable as teaching other things.
Well, I think it is an absolute abomination to perpetuate this kicking the can down the road. Look where our country's at. When I meet with clients that need my help, one of the very first things I do is go to budgeting. And if I did a budget for you, Chris, and you owned a home, and I said, do you own a home? And you go, yes. And I go, well, I notice on your monthly bills you don't include it. And you go, well, my wife and I just don't. We just don't think about it. Well, we have over 50% of the states in this country that have unfunded state obligations as well as the federal government on pensions that have created incredible debts. We talk about being $18 trillion in debt. Forget it. It's about like 70 or 80 trillion because they don't even include the promises of paying the people that when they retire what they're supposed to get. And so you boil it all the way down to the beginning, year after year, generation after generation. We are not providing the information and the education of doing it. And that is why I created SOFA in 1993.
So, just to finish off the last point before I ask you another question about, this will be about student loans. When it comes to pensions and state obligations in that regard, the chickens are starting to come home to roost, but we had a public that either allowed itself to be dumbfounded or didn't pay attention, and a political class that was happy to take advantage of that ignorance to put the chickens out in the first place. Here in Illinois, the budgets of for various things are being cut left and right, but they weren't cut by the current governor. They were cut by the people who sent out the chickens. That's my opinion anyway.
Yeah.
So it's not just a matter of balancing your own budget. It's a matter of being an informed voter and an informed citizen.
Well, there's a lot of things to it. In my 35 years as being a financial advisor, I look at people and more problems are coming from the home. We are not raising our children. Moms used to be at home. Ward Cleaver worked and June Cleaver was raising Wally and the Beeve, And, the families now, when both parents are working, are the wrong people. We have gang problems. We have all kinds of problems. The schools are deteriorating. Infrastructure. We're going to hell in a handbasket in a lot of ways. And it has to start with self-determination, discipline, education, keeping the civil in civilization, and we've got to know and be responsible for the choices. When you talk about politicians and pensions, remember pensions are long time deals before somebody supposedly is going to retire. So most of the people that pass those legislations, they're retired and gone.
Yeah.
And the public is left holding the bag. And we wonder why people are so cynical about government and politicians now.
Let's turn to self-determination of another kind. Your site,
Sure.
which, by the way, has loads of short articles, which are the best articles, on various topics covering the panoply of your financial education project. One of them is called How Student Loan Debt is Holding Back First-Time Home Buyers by Tim Manny. It's an interesting piece, very helpful to understand the consequences of your student loan choices. And I'm going to refer to another guest we had a few weeks ago named Alan Kors, who has started a company called Achieve Lending. I don't know if you've heard of it, Jim, but the Achieve Lending Company is a platform to help students look at different options for student lending. I mean, in our day, your day, my day, there was simply the student loan. You kind of signed up without thinking about it. But they have options, and they should start now with their financial self-determination, not after they've signed on to massive student loans. I understand you've been talking to others about that topic recently.
Yes. Yes. And you know what you're really talking about here is planning. We're in a world that I reach out to people what I call the ready, fire, aim mentality. And when we look as an example, and I mean it just as an example, it's a fine institution, but, you know, when I think that the University of Phoenix has enough extra money to build a football stadium in Phoenix, I just don't equate that with education, and the schools are always broke and needing money. And yet we look, and there's been many different investigations into a lot of these schools that are absolutely running student loan mills, bringing these kids in, promising a tremendous financial future if they get the degrees in, you know, in A, B, C, and D courses that they're setting up. And it's okay to go into Hawk right now because you're going to get out and get a job. And what do we know at the end of the movie?
Yes.
They're not getting out, and they're not getting jobs, and the debts are coming due. And now our student loans have surpassed automobile and credit card debts combined. It's over $1 trillion.
I'm sorry, Jim, to interrupt you, but there's a very important difference to the debtor with a student loan as opposed to those other forms of debt.
You're stuck with it.
You are stuck with it. I'm a corporate bankruptcy specialist in my legal career and cannot get a discharge of those debts ordinarily. It's very difficult to get, whereas it's...
My point is this. Somewhere along the line, the schools have gone from educating our kids to becoming their own economy. And some of these schools have made buku money, and what do they have to do with it? They have to offset it into investments. And in the old days, it went right back into grants and scholarships. When we have that kind of money to start building privately funded stadiums, I mean, that's just mind-blowing to me. When these naive kids, and again, I'm going to say it again, it is some degree the fault of the kid who's a young adult. You know what I mean?
Yes.
Not knowing what they're signing, not enough transparency of what they're doing.
Mm-hmm.
And, I mean, it's a mess.
Well, it seems like you're pointing out that the emperor has the wrong kind of clothes on.
Well, very eloquently put. And I'm really not trying to pick on University of Phoenix. It's just a matter of, think of the amount of colleges and schools and universities and places of higher learning that are out building stadiums. Do you see what I'm saying?
Oh, yes. You're preaching to the choir here.
It's a little egregious.
But let's turn from the young to the older. I don't want to say old
Sure.
because this is a category into which you and I fall.
There you go.
Which is planning for retirement. And there are recent political developments, recent regulatory developments, I should say, which some think are going to limit the advisory options for people who are not of massive means. And some other people say, well, there's investing and robo-advising, which will help people if they cannot get access to uncostly investment advice. So robo-investing, of course, it's going to be very sophisticated, technically well done from a certain perspective. But when you, Jim Chilton, hear about robo-investing, assisting somebody with their retirement planning, what are the principal points you would make for such people with regard to their modest retirement savings?
Well, first of all, before I would get myself into that situation, dealing with automation and things, I think it's a gimmick. It's just another convenient way to have less people drawing a salary, working for these banks and organizations, and going into automation. It's like when you call me on an automated line, I'm not interested in talking to an automated voice. Okay? I think I've always felt this way. I don't want a robot pulling my teeth. I want to go down and see the dentist. I want to meet with the dentist. I want to listen to the dentist. I want to get second, third, fourth opinions on certain things. When you ask me what are the ingredients, the sound financial plan starts with sound cash management. You're either managing your cash or your cash is managing you. That daily behavior, Chris, impacts what you have in your retirement. I mean, I'm reading articles now that are saying to the public, we only have 2 phases of retirement, accumulation and distribution. Oh my gosh, what about preservation of what you've accumulated, which will have a direct impact on the ratio of how long you're going to get the money and how much you're going to get on a regular basis. So when I sit down with people about retirement, I'm looking at their protection. I'm looking at their longevity of how long their parents live and their grandparents. That's a very important thing. I want to know their risk propensity. Can they handle losing? Are they making sound decisions? I had a doctor recently hand me a sheet of paper and said, are these all good stocks? And I had to push it right back to him and said, they have to be, Doc. He goes, well, why do you say that? I said, because you already bought them. You're buying them, and now you're asking me if they're any good. And his wife just rolls her eyes, and he goes, well, what's that about? She goes, I told you should have gone to a professional before you put $1.5 million of our money into these things. And then I looked at her, and I said, well, they're not all bad. She goes, I know, but it fits right into what you were saying about ready, fire, aim. So when you're talking about using this new methodology, it's like target funds in a 401k. Conceptually, the longer the term out, the less volatility you're going to have on your money. But when 2008 rolled around and the market plummeted, why did those concept funds also plunge? So I think it's very important when you're moving into the ideas of when you're going to retire and how much you're going to need to first sit down with people and get all your questions answered before you start going into some automated system.
I would like to point out for our listeners, if I haven't already, that the Society for Financial Awareness website has dozens and dozens and dozens of articles covering many of the things Jim is alluding to, and I'd like you to allude to one more if you could. Okay, we're not talking about a retiree or a student, just somebody, in their career years who is interested in gold. There are gold bugs out there. Gold exercises a fascination on people. And this person says, gold is down. I want to invest in it. What do you think, Jim? How do you begin to tell this person how to think about it?
Well, the first thing I ask is, I think it's a great concept, and I appreciate your question. I'm very neutral at this point. What makes you think that gold is your answer over anything else? I always keep answering by questioning the person, trying to find out their level of knowledge of what their expectations are. One account could be literally in gold. Another one might be in the risk of mining gold in new mines, and another one might be drawing more gold out of existing mines, and it all depends on the overhead of what it costs to do it. People don't know this stuff. So I try to get them talking to me so I know what they do know, and then I always try to talk about the risk involved in putting your money away And like what we've seen in gold lately. Boy, I go, what happens if you have a strengthening dollar? And then the value of those commodities and precious metals goes down. And they go, what do you mean? As soon as somebody says, what do you mean? Then I know they're not even ready to buy green stamps because they just don't know. And so one of the biggest things that we do in our workshops is getting people emboldened to stick their nose into things that they might want to do and find out why it works or it doesn't work for them. You know, so much of this, I only have one rule with my clients, Chris. They've got to be comfortable in what they're doing. And usually the correlation is your comfort level comes from the knowledge of what you're doing. And many people get taken because they don't know what they're doing and some slick salesperson is telling them what they think they need to know. And so that's why I created SOFA, for our people to be able to go out and talk in a neutral setting where we don't sell anything, but try to educate the people along the way.
Well, one can see you must have been a compelling high school coach, Newt Rockney-like, I would say, as well as teacher.
Well, I'm pretty passionate about what we do.
But if I might throw around some other famous orators, your website describes what's in it for members and says, among other things, the experience of being part of a much-needed movement, bringing into the light help and financial assistance. So a movement bringing listeners into the light. And my question to you, is this a Chautauqua movement, and are you William Jennings Bryan?
No, I'm not. I'm just Joe Dokes, as Bill O'Reilly would say. I'm just one of the folks. But I will do this. I have a knack of being able to reach people and asking them, if you're not going to take personal responsibility for your choices, who is? You can't keep critiquing and blaming everyone else, because the reality is this. Well, if we always do what we've always done, we'll always get what we've always gotten. And Chris, for the people that are educated, they're informed, they take control of their money, they take control of their behavior, they explore, they think about things, they discuss things. You know, those people need to just continue to do what they're doing. But the majority of us that are not like that, we need to understand it's not weakness to seek out professionals that know what they're doing and then feel good with them and make sure that you're comfortable with whoever you're talking with about your money and seek more than 2 or 3 opinions. And think about it before you do it. And always, always, always have a North Star, so you always have a plan of where you're going. And that's the problem. I invite people to come in all the time to see me, and I always say, and Chris, when you and your lovely wife come in, bring in your written financial plan. What do you think is America's response to that invitation that I make?
Plan?
Yeah. My what? I mean, you think I'm going to ask them to look at a 3-headed monster. I mean, it's unbelievable. My what? Yeah, your plan. Bring in your plan. I assume you have one. I got a 401k. I mean, that's the world we're in right now. And that is why we try to create awareness about your finances, and that's what we stand for.
Well, Jim, you haven't said let me hear an amen already, but I'll give you an amen.
Thank you.
And it's been great fun and illuminating talking with you. Thanks for joining us.
Well, thank you for having us. And if we can be of service in any way, feel free to call on us.
And this was Jim Chilton of the Society for Financial Awareness, www.sofausa.org. This has been Accredited Investor Markets Radio. Accredited Investor Markets Radio is produced by Stephanie Strait. Thank you all for listening, and let's do this again sometime soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.